Yeah, I mean, most of these IT companies, small rates of growth, and the misses and the beats. The beats are large, and the misses are, smaller, and that I think is at the margin one of the problems where these IT companies are facing. Well, Vinit Sambre is with us, head of equities at DSP Mutual Fund. Vinit, good to have you with us here. Do you have a PSU fund, or are you going to launch one?
No, not really, Prashant, but I think we should have taken this call maybe a year back. But anyways, I think the point is that over the last year or so, we have gradually been looking at some of the PSUs which broadly, are fine on their core metrics of ROCs, cash flows, and growth. Because what we have generally seen is that over the last, because of changes which are taking place as far as the overall investment climate is concerned, a lot of these PSUs have been beneficiary of that environment. And looking at the way things are shaping up, I think the sustainability also looks pretty okay. So I think not broad brush type of a thing, but on a selective basis, we have been open to look at some of the PSUs, but frankly not thinking about a fund at the moment.
Yeah, I mean, as you said, it should probably the time to do it maybe a year and a half ago. But which areas in PSUs, Vinit, since you've given that space a look? Is metals and mining as a space, or yeah, go on.
So I think the few segments where we were slightly maybe ahead was one was defense as a category where we had taken some exposure. Looking at the way the investments are taking place in the power sector, we have the power financiers where again we have taken this call slightly ahead. So I think those two important categories have done well broadly for us. And incrementally, I think the way I think things are going to shape up. Maybe railways incrementally should continue to see good flows. While we are still evaluating, we've not taken exposure because the stocks have already reacted a lot. But I think that's one segment broadly where we see that spends are likely to continue post the elections in a way.
All right. I just want to mention on Tech Mahindra, actually, there was a one-off this time around, and the revenue growth of just 1% included that one-off. So stripped of that, actually, it was not such a great set of numbers. Also, the trailing 12-month deal wins are down 51% year on year. Citi has put out a note where they have a sell call on Tech Mahindra. They have a target price of 1100. So it's well below the current market price. So that perhaps explains some of the reasons why the stock is under pressure. Vinit, hi, good morning. It's been very, on and off in the IT space. I mean, some companies are optimistic. Some companies say that the demand environment is still quite challenging. But largely, there is still this air of caution. What do you do here?
So I think broadly, I have been generally, on the positive side as far as the IT sector is concerned on the whole. And only thing is that we have to keep adjusting depending upon how the overall demand environment is shaping up. So at the moment, clearly what we are seeing is that there is a good amount of delays which are happening as far as the decision making is concerned from the client side. And that is causing the slowness for the IT sector or the IT pack as such overall. There are a few companies in the mid-cap space which has shown some kind of superior, let's say, outlook. And that really depends upon what, pockets of categories you are catering to or what type of clients one is catering to. But let me give you one small sort of thought, coming out clearly from the commentaries of the management, which is slightly, positive or inspiring for me, is the fact that most of the companies are now building up their generative AI piece. And this is something which was I think right now the debate is still on whether it will lead to a less amount of effort from the IT companies and will it mean that there will be, cut in the employees. But I think incrementally, the way I believe is that as the companies are investing into this generative AI piece, this is something which is going to become a decent size opportunity over the next few years. And that's going to add the growth momentum is what I believe, while jury is still not out, but that's what I feel coming, given what the commentaries the companies are sort of giving out.
A few more names, right? By the way, the market's taken a bit of a dive, but if you remember yesterday also, in the first 1 hour or so, there was so much movement, sell off and then a big bounce and then sold off again. And finally, the market, stabilized. And of course, it had a bit of a move then. Not a bit, a large move. Just a few other names in the PSU space which were not there in the mix in the morning. Midhani, which is Mishra Dhatu, is up 4%, if you can have that up. Garden Reach was not there in the morning when we were sort of picking out stocks, 4% higher on Garden Reach. There is Nevili Lignite, which is up 5%, all with large volumes. So just a few other names that I wanted to put on the board for you at this point. The others like IFCI, IRDA, PTC, Mazgaon, SCI, they're all sharply higher in any case. Vinit, so you waited on IT. What about pharma? That's another space where, some of the commentary around, especially US generics, etc., has been turning positive. And markets, of course, try to price a lot of this ahead, and stocks did well in 23. But what's the view from here?
Yeah, Prashant, so I agree, and all the more reasons to be slightly more defensively placed in the current environment where, as the results are coming out for, most of the companies, clearly, we are witnessing that there is a slowdown in terms of the overall sales momentum. The profit growth is also maybe, slowing as compared to what they had seen in the last year. So I see that given the environment today, I think healthcare as a category or pharmaceutical as a category is relatively well placed, where these companies are seeing incremental, upward trajectory in terms of growth, be it the domestic market or the US market, as you mentioned. And more importantly, I think these companies are still, looking at marginal improvement in the profitability. So I think in the current context where other segments are sort of slowing, relatively also healthcare makes sense. And you're right. I think last 6 months have been good for these companies, and we continue to like these. And maybe again, slightly, on an overall portfolio basis, trying to remain defensive. So this sector actually looks okay from that perspective.
All right. Hi, Vinit. Good morning. Nigel on this side. What about banks? The consensus was it's going to be a great year for banks. Suddenly these numbers are trickling in and you say that the deposit mobilization is not really taking place. Someone's NIMs are going to be under pressure. Asset quality is not looking that great. How are you all positioned out there and what's your preference?
So, Nigel, while we are, as a house, I think we have a significant exposure in the private banking space. And you're right, I think some of these concerns have emerged over the last quarter and this quarter. And maybe 1 or 2 quarters, these things will keep maybe impacting the bank's overall growth. But I think over the next 2 quarters, the base formation should take place. The margins maybe should settle down. And as the interest rates, which we are sort of projecting that it will head south, I think as that starts happening broadly, I think that will mean that the growth should start picking up. But at the moment, you're right. I think the banks are going to face challenge of mobilizing deposits, which is maybe going to lead to further some bit of more margin compression. And also on the growth front, I think the competition is very high, and the banks are maybe finding it challenging to pass on the high cost of deposit to the borrowers. So I think the banks should see some bit of a challenging period over the next 1 or 2 quarters. But as I said, that should be also base formation for the banks. And remember, I think today the credit environment is pretty benign, and most of the asset quality stress which the banks generally have to worry about is not there. So I think that's a good part for these companies to sort of, or these banks to, remain positive.
All right. Thanks a lot for joining in. I just want